Hello everyone, this is a quick recap of a trade that I took, and I think the previous trade that I've made, it would really help if I share this trade recap because it's very similar. So as in the previous video I told you, whenever you have to analyze the stock for like a long-term view, you should start with a monthly chart. But as this is my swing type approach, I don't usually see monthly chart. I just only see daily chart. Of course, there's no crime in seeing monthly chart, but that doesn't make sense if you're just staying for a 2 to 3 weeks only, even not for a month or trade. No need. So here I just analyzed and was able to figure it out. First of all, yeah, do remember that you have to zoom out your chart entirely that much you can. Like this is the data from 2015 till 2025. That's a 10 years data you have in front of a daily chart. Yeah, that much is needed when you analyze a company. I can clearly see that company is really in consolidation. There's really not much that I have to focus on any major key areas to focus on that can bounce or can give a breakout or like important raw liquid. No, there are none. So I will look for a like less compiled data from 2024 and clearly see stock rose in just a five-wave structure, which is actually a impulsive pattern if you analyze through Elliott wave. Though I don't believe in that much. I think that's pretty useless. But just to see that it is in a trend only. So from this top to bottom, I make a fib retracement. I clearly see the sign that this was an impulse. This was a correction. Only don't remember just this was a trend. Like this is the trend and this is the correction. This is not just one correction. If you're getting pretty much sense what I'm saying. So stock rise, and after that it consolidated for around let's see the bar count that I hope that you remember that is very important in our this type of analysis. Yeah, so these are 109 bars, so to say. That's okayish, not very great to say as a trend, but I can clearly see that type of formation that I told you guys. uh, a breakdown, false breakdown, yeah, that's there. There's a false breakout, yeah, that's there. There's a huge impulsive move with volumes, as you can see here. There's a retracement, yeah, there's a retracement. There was a breakout at this range, yeah. Again a retracement, but do remember that your stop loss would be here at least. Let me keep on the EMS on for you. Okay, so this is not a daily chart EMS, so not a weekly. Okay, do forget about the EMS. I suppose we have to analyze through the trend only. It is not meaningful here. Yeah, so you have not entered any position because no bars count, no EMS, so you have not entered here. uh, Price doing did increase, so it doesn't matter, it has increased. When I was entered this position, I saw that this was a small consolidation, a breakout, a longer consolidation, which really sparked my eyes because this is type of a classical N pattern that I usually trade in markets, where I see a small consolidation breakout, a longer consolidation, and then a breakout. So here I target this consolidation by going to an hourly chart. That is usually my time frame for a swing trading, and just counted the number of bars it has. It has around, yeah, that's pretty 169 bars. Actually, I entered here, so technically it shouldn't be this point. This should be this point. Yeah, so this is the point that has 95 bars. So this was my error actually, though you can see it was definitely in profit, but it was my error. I didn't saw that. So what was my thesis entering this point? There was a low taken out, a false breakout of this point, ABC, like in three-way structure, a retracement deep in, and when I put on EMS on, the 200 EM was here. So I was very pretty confident that I take my SL here. Not guys here, no, that would be a pretty fucked up RR. So take my SL here and entered at this breakout point, which was the retracement break. So I took my position, not here, at here, but that was the error. I didn't see the bar count. See the power of the bars. It was 195 bars, and I told you that minimum it should be 120. So price what did it could have stopped me. Yeah, I could have been in loss. I didn't see. I don't know why, but the bars extended till 120. Now I was pretty much sure that 120 bars has been done. So whenever it broke this high, I was pretty confident that this trade would go in a good line and did pretty well after this breakout with volumes. You can see with high volumes on this high wick candle, and price finally gave me my target. So if you have not foolish like me have entered the stock not here at here a slightly expensive, but it would get a lovely RR. Like see this, and I made my EMS on. You can see. take the SL of this 100 EMA, because at 30 minutes it would be its 200, of course. Yeah, actually this was a 15-minute type of formation. Number of bars, yeah, this was a 15-minute type formation. So if you enter at here, mm, yeah, I entered at here. Where's my long position tool? Yeah, it's here. If I've entered it here, SL was at this point, and you might be pretty confused, like why did I shifted my time frame to 15 minutes for SL in finance swing trading, and why not hourly chart, and why 15 minutes and why can't it be 30 minutes? I usually try to find small SLs and type of consolidation it is. This is not a monthly style consolidation, just a 2 weeks from 2 July till 9 July. This is a 1 week consolidation. One for 1 week, it's 15 minutes. So enter at, you should have entered. This is my original position, that what should have been done. I should have entered at here, slightly explained. You can see the price is actually higher, but I'm saying it's a bad trade because the RR was controlled in this position. The 1:3 came pretty much earlier, like at this position. Because of my very bad entry, my 1:3 came here. I exited here, but if I have taken that, I would have got 1:1 4.5. And these are just for runners, 1:8. And in this, 1:5. You see, well, like I really want to just myth bust your this concept of buying low. See, at this point only, I definitely showed you guys I bought at higher price. I should have bought at higher price because I would have get more reward. Have you ever like heard buying at a higher price to get more money? Definitely not. But that's the concept of Indian markets. You have to trust this tool, RR tool. Like this, if someone asks me which is the most important, I would not say to EMAs, or I would not say like Fibonacci or like any indicator, even price action, volumes. I would just say it's risk to reward. Risk to reward is the major component of your trading. And yeah, so here was my trade recap. This is my original trade. I try to make you understand my concept of how I booked at 1:3. This was a trade I took at 26 June, exited at 14 July. With that, only 20 days, 2 to 3 weeks type of trade, and made 3% on my capital. Yeah, that can be done if you really do well. Like, yeah, I hope it. I just not wasted your time. You really get to know something new about how the markets work. And thank you for watching. If you like this video, and if what the fucking the like, if you like learn something new and you feel, yeah, this is the guy that really would educate me a new or like the best concept that ever has been in the trading, to subscribe my channel. Okay, thank you, thanks for watching, have a great day.